Sure. Yeah, maybe. Even better. Okay. Yeah, I believe yours is right there with the audit material on the top. Okay,
Record.
we're gonna record. I'm gonna do that gavel thingy. We're gonna make this formal. Good afternoon, everyone. Thank you for joining us for the Suburban Mobility Authority for Regional Transportation Audit Committee meeting for Thursday, December the 5th at 1 p.m. I will call the meeting to order, and Ms. Martin, if you please would proceed with the roll call vote.
Chairperson, Mr. John Paul Rea.
Present.
Mr. Abdul Haddis. Mr. Britt Rees again.
All righty, all present and accounted for. In front of you is a proposed agenda for today's meeting. I would very much appreciate a motion to approve. Been moved? Supported? Any discussion? Seeing none, all those in favor, please signify by saying aye. Aye. Any opposed? Motion passes. Ms. Martin, certification of public notice, please.
SMART will hold the December 5th, 2024 Audit Committee meeting at 1 p.m. on the 6th floor of the Beale Building, located at 535 Griswold Street, Suite 600, Detroit, Michigan, 48226. This meeting is open to the public.
Thank you, Ms. Martin. We will go on next to item number 5 on our agenda, public participation. Members of the public, please be advised that this is the audit committee meeting, and if there should be any general operational concerns for SMART, it would be best appropriate for our 2:00 general board meeting. Seeing no members of the public once, twice, and 3 times. If there are no objections, we will close public participation. And we will move on to new business, where we will be seeking a resolution for approval of audited financial statements for year ending June 30, 2024, including other independent auditor reports. Ryan, if you wouldn't mind kicking us off today.
All right, thank you so much. You should each have a copy of the annual reports. It is not in the full board. It was
Sorry.
separate three.
My apologies. Thank you.
He's right here. There is a copy of the annual report, a copy of the auditor's end of audit letter, as well as a copy of our federal awards audit or schedule of federal awards audit. Overall, this was a pretty good year for SMART. You're not going to see a lot of significant changes in the financial statements. We're still running at about budget, so you're not going to see a lot of big swings we're not running any sort of deficits. I do want to point out before I turn it over to our friends at Plant Moran to go through in a little bit more detail. There are a couple of differences. In February of this year, the SMART board approved some additional pension funding. So you'll see we've got a little bit less cash, a lot less pension and other post-employment benefit liabilities. So we've kind of paid down a lot of the legacy costs that SMART has incurred over its existence. There are 2 audit findings I wanted to mention this year. The first of which has to do with a timing of revenue recognition. We utilized some federal relief funding through the CRISA and American Rescue Plan Act that Plant Moran's going to talk a little bit more about. And we needed to move that revenue from this year to a prior year based on the eligible expenses that we use. But again, this is a timing issue. Well, it is a finding. It's a timing issue, not an eligibility of the drawdown issue. We restated the prior year to include the revenue that was approved at our February, the additional revenue approved at our February board meeting. So that would have been recorded in fiscal year 23. So we did go to the board with a budget amendment for that revenue back in February. So the budget has already been amended. And the other issue had to do with our federal revenue subcontracting. So when we kick money down to our community partners, there's a check we need to do to make sure they are not suspended or debarred from receiving federal revenue. There was a group of subrecipients, including mainly our friends in Monroe, that we had not included within that procedure set. So we've modified our procedures that when we award a grant to a subrecipient, that we will at that time.
And Ryan, with regards to the standard procedure of notification, would the FTA notify us anyway if there was a disbarment, or would that just go directly to the service provider?
They would not know that we're gonna subcontract directly
Oh,
with
that
the
makes sense, yeah.
entity, so they won't notify us
Okay.
directly. That's why we need to check.
Okay.
Yeah.
Okay, gotcha. Okay,
Other than that, the balance sheet remains stable. The income statement, we're not running any sort of deficits. I will turn it over to our colleagues at Plant Moran to go through in a little more detail.
how we doing, Pamela, Keith, and Amy?
Right?
We ready?
Yes,
Let's do it again.
right. Thanks for having us. So again, we're here today to kind of cover the results at a high level. Just wanted to thank the entire team at Smart. We work a lot, obviously, with Ryan, Lynn, Nicole, and their team, as well as Dwight, Tiffany, and many, many others throughout the organization. So appreciate the professionalism that we receive throughout the audit process. In addition to the reports that Ryan mentioned that you have in your packet, we do also perform 10 additional procedures or different deliverables that we give related to grant subrecipients, connectors, and others. And so most of those reports have already been delivered to management. And there's one additional report that we will begin on probably in the next month or so related to the required reporting to the FTA for the National Transit Database that SMART performs, and then we perform some procedures around that. So a little bit more work to be done, but basically we're done with almost all of the deliverables. I did want to mention too, we're excited to be back for another 5 years. So thank you very much for the confidence that you've given in us as your trusted advisors, and excited to be back working with SMART again. Another thing just to mention, this year, there were no new accounting standards, but there were some new auditing standards this year. So we were required to dig into the internal controls. We always look at the internal controls related to financial reporting. This year, we looked at them in more detail and also looked at a lot of the user access within the IT system related to that. So a lot more in depth as to not only who does what, but who can do what within the system. So I think that was a really good exercise. We had a lot of good conversations with team around that and some suggestions out of that. So with that, I'm going to turn it over to Amy and have her kind of cover high level the financial statements.
Thanks, Pamela, appreciate it.
Yep.
How we doing, Amy?
Good. All right. So we can dive right in here to the financial statements that Ryan has up on screen, starting with page 1. So this is where you'll see our independent auditors report. The first section here is our opinion, and we're happy to report that SMART received an unmodified opinion this year, which is essentially a clean opinion and the highest level of assurance that we can provide that the financial statements are free from material misstatement. Now, you may notice about halfway down, we do have an emphasis of matter paragraph this year. This is just discussing the adjustment that Ryan went over with you all briefly before Pam started. And one thing to note is that this paragraph says our opinion is not modified with respect to this matter. So it is. We can move on now a few pages, flipping to page 7, which is the statement of net position. So first, you can see that current assets decreased by about 73 million. Ryan did touch briefly on this as well. It's kind of a factor of two of these buckets here. The first being cash and investments are down by about 51 million. Again, largely due to those extra pension and OPEB contributions during the year. Second, you'll see that grants receivable is also down by about 22 million, and this is just due to the timing of requests, as the 2023 balance you see here included that large COVID draw. Non-current assets increased by about 14.8 million this year, which is really driven by your other post-employment benefits or OPEB, as this is actually flipped from a net liability to a net asset this year. So as you may recall, as Ryan started off this meeting, there was some extra contributions this year. SMART contributed about 24 million to the fund in addition to the pay-as-you-go costs, and the OPEB plan is now 112% funded. So that is great. Moving down the page to current liabilities, there's a decrease here of 1.1 million. So fluctuations within this group are largely due to timing of when SMART owes vendors and others at 6:30. So this is pretty typical. Continuing down the page to your non-current liabilities, this decreased by about 25 million this year. As we talked about earlier with OPEB, it flipped up to that asset. So that is a factor of your current liabilities decreasing, non-current liabilities decreasing. Additionally, your net pension liability decreased by just under 5 million. So just a reminder here that your pension liability is actually measured as of December 31st, 2023, which is MERS' most recent year end. So it's important because similar to OPEB, there was a large contribution this year to pay down those liabilities, but that contribution, the timing of that was after that 12/31 measurement date. So you'll really start to see the full effects of that contribution next in next year's financial statements. So that extra contribution was about 60 million. So currently the pension plan, as it stands at 12/31, is just a hair under 77% funded. It's important to note this is 2 percentage points up from the previous year, and it really is in excess of the state's definition of underfunded, which is 60%.
Sweet.
We can flip over here to page 8. The last component of this statement here is net position, which is split into 3 categories: your net investment in capital assets, which has already been spent in the form of buses, terminals, equipment, etc. Then you have restricted here, which can only be used for specific purposes. And this year is mainly related to that OPEB asset. You can only spend that on your other post-employment benefits. And then the remainder of 110 million is categorized as unrestricted. So that's available to fund your future operations. We can move on to your statement of revenue, expenses, and changes in net position on page 9. So looking first at the operating revenue category, fares are up almost 6% or about 300,000. Your operating expenses, they're very comparable to last year. Moving down the page to the non-operating revenue, this is where you'll find all your major sources of revenue. So local contributions, which are property taxes, those are actually down about 14.7% this year, but really this is a function of timing and SMART's contractual agreement with Oakland County, as there was a little bit of a change in the payment structure there from what you may have seen previously. Your next biggest revenue category here is state operating grants, which includes Act 51 monies. That was up about 14%. Lastly, this section also includes your federal operating and preventative maintenance assistance, as well as other state and local sources, which would include your federal grants and other state grants respectively. So from one year to next, these categories, along with capital contributions, really it's a little bit further down the page. It can increase and decrease based on the activity during the year and how SMART elects to apply its available grant awards. But I did want to throw one quick plug in here before I wrap up with this statement. As Ryan noted, some of the 2023 balances were restated to take that revenue back. You'll see that here on the federal operating and preventative maintenance assistance line, along with a corresponding increase in the grant receivable line for 2023. So these increased by 33 million, which flows to your 2023 change in net position, which also increased by 33 million. But we'll flip back here to the current fiscal year, 2024. Overall, almost 20 million was added to net position this year. So as Ryan said, 20 million is a good way to to end at 6/30/2024. So I won't take time to go through the rest of the pages of the statements, but those were just some of the quick highlights we had prepared for you. If you have any further questions, please feel free to ask.
Amy, greatly appreciate the overview, and to the entire team at Plant. Very much appreciate the expeditious reconciliation of the two findings that were itemized here. And Ryan, thank you to you and the team also for being able to reconcile that and ensure that as we move forward into subsequent years, that there is no adverse impact financially to the organization. Brett, any questions? Yeah, go ahead, Brett.
Just one, I'm sure I'll use the wrong term, and you probably mentioned it. What is our fund balance that we carry? Is that?
The
Reserve?
The-
Reserve, yeah.
So we've got the total net position is $276 million, but about 150 of that is restricted because it's invested in capital. So it's like those are our buses, those are our facilities. You can't spend it, right? There's two other restricted portions. One's just shy of $200,000, 178 that is cash balances that we are required to spend in future grants primarily. So it's like we've got to use that for a specific transit person. Yes. Yep.
Maybe in the neighborhood of plus or minus 120 million on the unrestricted. Because 276 less 150 restricted.
Yeah, you're
is some change.
110 at unrestricted
10,
that we
okay.
can spend.
Cool.
So it's not quite 6 months worth of operations.
Runway?
Yeah.
Okay. How does that benchmark us with other transit agencies? Is there some type of preferable benchmark? I know every once in a while they throw like some lofty numbers at us from a county administrative lens. Is there anything that's prescribed through the FTA, or is it just like keep managing your money right?
There isn't a prescribed
Sure.
number, so everybody's going to be different. A lot of transit agencies didn't get out of the pandemic as unscathed as we did because they collect a larger portion of their revenue from fares.
Okay.
So if your ridership goes down and you're collecting more money from fares, you're more negatively impacted than SMART was.
Example, San Francisco. 70% of their fares come from revenue. 70% of their operating.
Revenues, yeah. Yeah. Anything else, Brett?
No, the 6% increase in fare revenue. I know it's a small part of the whole budget, but does that, we didn't raise our prices, right? That's ridership.
That is ridership, and about half of that increase is related specifically to microtransit.
Okay.
Wow.
In the microtransit area.
Hal, anything on your end? Excellent.
They do have a letter and another federal report as well.
Let's do it.
All right,
Go ahead, Keith.
thank you. I will, excuse me, briefly cover the separate report, the federal award supplemental information, which is all on a separate cover as well. It starts with 3 separate independent auditors reports on the schedule of expenditures of federal awards, as well as SMART's compliance with financial reporting requirements and compliance with major program testing. All of those are unmodified opinions. About halfway through that report, the first numbered page is page 1, the schedule of expenditures of federal awards, which lists all the federal spending for the year. It totaled just over $20 million. We, based on formulas and risk assessments, were required to test the federal transit cluster, which is the first grouping near the top of the page. That was $12 million of expenditures and gave us about 60% coverage of the total federal programs. So well in excess of the 40% requirement for the year. Page 4 is sort of a checklist of what we tested, the results of our audits, and any findings that we had. As Ryan mentioned, there are 2 findings, one related to the financial statements and one related to federal awards. I think he's done a good job detailing those out. As far as the prior period adjustment related to the $33 million of federal awards, that's included in section 2 or page 5 of the report. The spending of 20 or applying 2023 expenditures to the grant in 2024 is perfectly acceptable under the grant, which is why it's not in section 3. Not technically in compliance with the accounting practices, which is why it's included here. But that's been properly reflected as an adjustment to 2023, and as Amy mentioned, did not impact our opinion. So I'll stop there unless there are any questions specific to the federal awards report.
Keith, as always, thank you for the due diligence and the analysis on the federal cluster. Any comments, questions, general insights from members of the committee? Ryan, any thoughts on your end with regards to the reconciliation of the findings or any other elements of the audit at this time?
I think that the adjustments that we've made have done a pretty good job, kind of making sure that these don't recur into the future. The federal relief funding is a little bit of a different animal.
Sure.
In that we usually apply and program for a grant, whereas this money was kind of made available to really help us with any pandemic expenses that we
Sure.
had once upon a time. So it's just the procedures and the process around it is a little different than our normal procedure. But I think we just need to, as long as we remain diligent and keep looking at it, and making sure that we're only getting at allowable uses for the funding, that we won't run afoul of the FD.
Excellent. Thank you so much for your stewardship on this, Ryan, and a tremendous amount of credit to the entire finance team. Also to our friends at Plant, very much appreciate the brand reputability of the Plant Moran name behind this entire endeavor, and thrilled that you guys want to stick around and do some work with us a little bit longer. Ryan, if I'm not mistaken, we would be seeking a resolution for approval of the audited financial statements. Is that correct?
Did you have any other items
Sorry.
that you wanted
Am I
to touch
jumping the
on?
gun?
I mean, there's the letter, but there's really not too much in here, so we could just briefly.
Sure,
maybe,
go for it.
One-
Sorry,
like 2 minutes maybe.
that's good.
So the letter's only, I think, 7 pages. We won't go through the whole thing. There's a couple sections within the letter. Section 1 is really that required communication. So we're required at the end of the audit. And you all recall at the beginning of the audit, we talk about our plan. This section 1 kind of follows up to our plan. Did we have to deviate from our plan at all? And pretty much what this says is we didn't deviate from our plan other than some of the items we already discussed today. So pretty straightforward. Section 2, we did have a few kind of recommendations or best practices. Some of these are similar to recommendations that we've made last year. In talking about entities of your size, looking at potential room for internal audit department or individuals. We think that's pretty common for an agency, a governmental agency of your size, and really a best practice. So that's been a recommendation. Also, I mentioned those additional reports that.
Sure.
Sorry, go ahead.
It's repeated from last year. We did the same thing this year. We need to correct it.
Al, I believe, and Pamela, correct me if I'm wrong here, there was a recommendation that we would look at creating more internal audit controls that would support and even supplement some of the stuff that our finance department is doing. Yes, no, maybe so.
Yeah, so it's really, there's not a finding or anything. These are just,
Best practices.
best practices, kind of overview what we see in the industry type
Yep.
thing.
Nope, I got you.
Yeah, so no findings, just some suggestions, things to consider. We know we can make a lot of them, but we're not management and we also don't have to pay the bills, right? So,
Stuff comes in.
so some of these things obviously need to be considered when you're looking at that. The other item is just I know it's been discussed a lot. You have a lot of agreements with, other entities, right? So your, other providers and community partners. And so over the years with all the different procedures that we've performed, we've made quite a few recommendations. Some of the information SMART receives from these community partners is not very timely. Which makes hard for SMART to be timely when you're not receiving timely information. So just kind of going back through those, and I think maybe a little more focus around working with those communities, which I know management's already in discussions about looking at that, but additional procedures related to that and just kind of that openness with the community partners on what's expected from them in terms of, hey, your contract says this, you need to be, meeting that expectation. And then we do have a few just best practices related to grants, in terms of drawdown timeliness and other items that we noted in terms of, documentation and things like that. Again, no findings or anything, just some best practices that we noted throughout the audit. And then I'm not going to go through everything on 6, 7, and 8, but these are just other sort of legislative items that are applicable. Inflation Reduction Act is a big one that we talked to management about and will continue to talk to them about. We're actually in the middle of a project with APTA where we were hired to create a tool for transit agencies to use to be able to help them with implementing Inflation Reduction Act and seeing if they have any applicable. And basically what this is a tax credit. So it seems weird because you don't pay any taxes, but you still can get a tax credit. And so if you have EVs or charging stations, or there's a lot of different applicabilities to this. So something that definitely keep in mind, and we'll continue to kind of make sure that we're communicating with management on that. So if you ever hear anything about Inflation Reduction Act, call us. We can walk you through it. And then obviously cybersecurity and IT, we know your team's on top of those things. It's just something that's never going to go away probably. And I know ERP is a big thing with you guys and taking a look at the technology that you have and making sure that you're as efficient as possible there. So it's just general comments around that, but that was really all we had there.
I'd like to have a conversation with you guys about the Inflation Reduction Act.
Yes, yep.
There are some things that I've done in past lives
Okay,
to help transit systems reduce their expenses that I'd like to discuss. That
Okay.
I think would have some applicability across the nation, particularly with good auditors that we find is some years ago,
Okay.
particularly as it relates to inventory management. Even one of the things we're going to be doing this year is the fuel hedging, and some other things out there that can help transit systems maximize their dollars, and some of the other processes. So I'd be happy to talk about that.
great. Yeah. Okay, no, I appreciate that. We will definitely look to maybe set something up in January.
Okay,
So,
that'd be great.
yeah, thank you.
Excellent. All
That's it.
right, so we need a resolution of approval for the audited financial statements for the year ending June 30, 2024, including other independent audited reports. It's been moved, supported. Any discussion? Seeing none, all those in favor, please signify by saying aye. Aye. Any opposed? Motion passes. I believe we are on to 6B, the draft of the fiscal year 2023-2024 financial statements. No worries. We good?
We're good on that.
We're good on that. Excellent. Good to know. We're going to move on to item 7, committee member business. Any other business to discuss on behalf of this committee, Ms. Martin? Oh, can I get a motion to approve the draft fiscal year 2023-2024 financial statements?
So
Been moved, supported. Any discussion? Seeing none, all those in favor, please signify by saying aye. Aye. Any opposed? We got rid of that. Any committee member business? Seeing none, the chair would entertain a motion to adjourn. Been moved, supported. All those in favor, please signify by saying aye. Aye. Any opposed? And we are adjourned.